All right. Good day, everyone. Welcome to Next Gen Professional Associates. In today's class, we shall be talking about the cost volume profit analysis or the break-even analysis. The question is, what does this mean for? It is mainly for decision making. Break-even analysis is a point where the organization did not make either profit or loss. Then you want to use this to make decision. You could say it could simply be defined as the study of interrelationship between cost, volume, and profits at various levels of activity. The cost volume profit analysis is mainly for what? For decision making, right? Now, let me come again. Cost volume profit analysis, this is the technique that assists in decision making by employing the marginal costing concept and measures the effect on profits. Class, you will see that the cost volume profit analysis adopt the format, adopt the rule of marginal costing. Because in this class, we will be talking about contribution, right? Contribution and some other changes in variable cost. Class, let me quickly say this again. When there is a change when there is a change in your sales, right? Of course, before you can be able to make that sales, you have to incur some variable cost. Before you can make a sales, you have to produce. When you produce, you make a sales. Before you can be able to make a sales. Now, when you are making a sales of 50,000 naira, 50,000 naira, the sales you make of 50,000 naira, the cost you incurred in making that sales of 50,000 naira will be different from when you make a sales of 100,000 naira. The cost will be different. So this is to say that the variable cost varies with the levels of sales, with your levels of sales, because it will varies with that activity. Class, break-even analysis, it is a point, it is mainly for decision making that adopt the format of marginal costing what concepts. However, companies make use of it for what? For decision making. Break-even analysis is a point where the company did not make either profit or loss. So we will be looking at that, whereby the organization, the question or the organization will say, oh, what is the break-even point in units when we want to make a sales of 20 naira or 20 units? What will be the break-even point of this particular product? Class, we will be looking at that part as we proceed with our lecture. Now, if that is well understood, we will talk about the assumption of cost volume profit analysis or CVP. Of course, there are some assumptions used, right, in cost volume profit analysis. One, the selling price per unit is constant and the variable cost per unit is what? Is constant. Don't forget that under the cost estimation, your variable cost per unit is constant, right? While your total variable cost changes with the levels of activity. Class. So the assumption that CVP adopt is that, oh, selling price per unit is cost. It is assumed that you will use one selling price per unit in the period, in a particular what? In a particular period. The total fixed cost remain unchanged regardless of the output. Of course, your total fixed cost will remain what? Will remain unchanged. Don't forget that whether you produce or you don't produce, your fixed costs remain your fixed costs. right? And another assumption is that there is no opening or closing stock, that is production equals sales. What it means is that when you produce 20,000 units, you will sell 20,000 units. So that means you don't have a closing inventory class. So the question may say, what are the assumption of cost volume profit analysis? Of course, when we look at the formulas, right? When we look at the formulas, I'm not going to give you formulas. I will teach you how to get the formulas. You don't even need to cram. I will teach you how to get the formula, right? And that is what we are doing at what? At Next Gen Professional Associates, right? We will teach you what you will use to pass your exam, as well as what you will use in a real life situation, right? Now, another thing you need to know is that there is a what? Relevant range. The semi-variable cost can be separated into both the variable and it's what it fixed. Of course, don't forget that your mixed cost is a semi-variable cost because it has an element of what? Of variable cost as well as what? As well as fixed cost. All costs should be categorized as either variable cost or fixed. So these are the assumptions of what? Of cost volume profit analysis or break even. Don't forget that it is mainly for decision making, right? It is mainly what? For decision making, and it adopts the techniques of what? Of marginal costing. Now, if that is established, now we will move to the limitations. The limitations of what? The limitations of what? The limitation of what? Cost volume profit analysis. The selling price per unit is assumed to be constant, but in practice, this may be invalid. Of course, in practice, you can't tell me that the sales for this year will be the selling price for this year will be the same thing with the selling price of next year, right? When we look at the cost, when you are looking at the cost of production, so how will you set the same selling price all through? So that is one of the limitations. It might be difficult to separate some costs into fixed and variable cost portions. Well, during the process, of course, we already know what you can use to separate your fixed costs and variable costs. Well, it may be difficult as well. And these are the limitations of what? Of these are the limitations of what? The CVP or what? Break-even analysis, right? When I send these notes to you, please go over it again. Now, if this is established, we will look at we see how the practical implication. What is the practical application of CVP? Don't forget that I said at the end of this class, you should be able to use when you work in an organization, manufacturing, or you are a cost accountant, right? You should be able to apply CVP in what? In real life what? In real life situation. Now, what is it? Now, the practical approach is that planning and forecasting of profits at various level of activities. Of course, your is BEP means break even point. You are assuming that, oh, when you want to sell 20 units, what will be the profit? When you want to sell 20 units, what will be the profit? All right. When you want to sell 50 units, what will be the profit after tax? What will be this? What will be that? All right. Now, useful in developing flexible budget for control purpose. Of course, CVP analysis is flexible, right? When we get to flexible budgets, you will know more about a flexible budget, right? And these are the practical, without wasting much of our time, these are the practical what? Applications of what? Of cost volume profit analysis. Now, we will quickly move to the concepts of concept for calculation purpose, right? The concept for calculation purpose class, please pay attention to this part. It is what? It is very important for you to pay attention to this part. Now, when calculating in units, contribution per unit should be used. When you are calculating BEP in units, BEP means break-even point in units. BEP means break-even point in units. When you are calculating BEP in units, right, in units, contribution per unit should be what? Should be used. But when calculating in value, contribution margin ratio or profit volume ratio should be used. We will look at that, right? We will look at all those formulas one after what? One after the other, please. But take note, when the question says determine the break-even in unit, you are to use the contribution per unit. But when you are to determine the value, you are to use what? The contribution margin ratio. The contribution margin what? The contribution margin ratio or the profit volume ratio should be used. We will get there. Now, it should also be noted that profit is break-even analysis. Is assumed to be profit before tax. And so, where there is profit after tax, it should be converted to profit before tax. So, you will see a lot of questions like this under the break-even analysis that, oh, what will be the profit after tax of 12%? If they say, what will be the profit after tax of 12%, you need to convert it back to what? Profit before tax, of which we'll get there. Class, I have about 6 questions. I think it's about 6 questions for you, right? Under the cost volume profit analysis. Guess what? And they are all examinable, right? Now, it should also be noted that where sales volume increases, the variable cost would increase, would also increase in line with what? With the sales volume. Class, don't forget this. Your variable cost will increase in line with your what? With your sales volume, right? Which means that when you make a sales of 50 units, the cost you will incurred in making the cost of 50 units, in making a sales of 50 units will be different when your sales unit increase to 100. Definitely your variable cost will vary with the what? With the sales volume, right? You should as well note that. Now, under the cost volume profit analysis or the break-even point analysis, right? The formulas are divided into two. Class, the formulas are divided what? Into two. The first one is you have the break-even point. You have CVP with single products, right? Single products, right? Then you still have the one of multiple products, right? Single products means that it is only one product you were given in the question. And you were told that what will be the break-even point in unit or in naira, what will be the profit after tax, or when we want to make a target profit of 2 naira, this, blah, 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 like that, right? Now, this is to tell you that it is a single product. But when you are given two products, let's say product A, product B, right? Let's say product A, product B, which means that it is a multiple what? Product. When you are given more than one product, it becomes what? A multiple product. Now, single product have its own formula. Multiple products have its own formula. They are similar, but the difference is just the weighted average. Now, we will look at the formulas, class. We will look at the formulas for calculating formulas in cost volume profit analysis using what? Single products. When it is single products, when you are producing only one product, what are the formulas in what? In cost volume profit analysis for a single product. But before I continue from there, do you have anyone that have question for me before we start the formula properly? Hello? Hello? Am I
Yes,
talking to
sir.
myself? I ask question now. Do you have anyone that have questions? Yes or no, please?
No, for now.
No, for now, sir.
Okay, that's fine. That's fine. Please always answer, please, because I need to get response before I move on. Right. Now, CVP for a single product, right? Single product formula. Now, ideally, I'm supposed to copy the formula and give you, yeah, go and take it, go and study it. But no, I want you to learn the formula, right? When it is single product. Now, what are the formulas you need to know when it is single product? What are the formulas you need to know under it? Now, the first thing, the question may say the first thing is your contribution. Let's say contribution per unit, contribution per unit class. Contribution per unit is calculated as is equals to your selling price minus your variable cost per unit. We give you what? We give you contribution per unit. Contribution per unit means contribution per one. What will be in marginal costing, you have contribution. Is that not so? That is why they said break-even analysis adopt the technique of marginal costing for decision making because of this contribution per unit stuff class. Now, your selling price, let's say the selling price means one price. Let's say it is 2 naira per unit, right? And you want to determine the contribution per unit. You say selling price minus the variable cost per unit, not the total cost per unit. But in a situation whereby you are given the total, right? Total contribution, let's use total contribution. Total contribution equals to sales minus total variable what? Total variable cost. You can see that it is different from the first one. The sales is your total sales in value, total sales, not per one. Let's say your selling price is 5 naira. You produce 5 units. 5 times 5, 25 naira. Your total sales is 25 naira. Then the variable cost you incur, let's say, based on that production, it is 2 naira per unit. 2 times 5, 10. That is total variable cost. Class. That is what? Total variable cost. So it depends. Your contribution per unit. The first one is contribution per unit. But when you want to get your total contribution is your sales minus total variable cost. We give you contribution. We give you total contribution, but not per unit. Total contribution is the total value. But when you want to get the contribution per unit, and you already get your total contribution class, let's say your total contribution is 1,000 naira or 10,000 naira. Then you want to get the contribution per unit. Just divide it by the numbers of units. Don't forget it is contribution per unit, per one. Just divide it. You can see per one, units, divide it by the numbers of units produced, right? And that is that. So I'm just bringing this total contribution so that you will know how to do that, right? Or we can say, okay, let me continue with this. You can say your sales, let me bring this down. Coming. Okay, you can say your sales, let's say your sales minus your variable cost, that is your total variable cost, you have this. I'm putting it in another format. Then you have your contribution, that is your total contribution, right? Your sales minus this, we give you contribution, right? You can see there, we give you what? Contribution, right? So if this is contribution, right? Don't forget that this is total sales, total variable cost, total contribution. Now, your fixed cost, you can see that this format look like you are doing a marginal costing. It adopts the techniques. Your fixed cost given to you in the question. When you minus your fixed cost, you have your what? You have your profit. You have your what? Your profit. Is that also? You have your what? Your profit. Now, I'm just trying to tell you that this is how it works. If it is total sales you have, minus it from total variable cost, you have your contribution. Minus your fixed cost given to you in the question, you have your profit. Now, if you want to determine the contribution per unit, this amount that you calculate here is the total contribution. Then when you want to get the contribution per unit, let's say you want to get the contribution per unit PART1, you will just divide it by the numbers of units produced because they say contribution per unit PART1. Or if the selling price is given to you in the question, you say selling price minus variable cost per unit, you have your what? Contribution per unit. And this is your profit statement. When the question says that, oh, determine the what? The profit statement, right? Of this, you say your sales, your total sales, your total variable cost, your contribution, minus your fixed cost, you have what? You have your profits. Now, the next thing you need to know under this, number 2, class, are we following?
We
Are we
are
still
following.
together? Okay, that's fine.
All right, sir.
Yeah. So the next formula is BEP. BEP, because I will use abbreviation. BEP in units. BEP means that sales in units, right? BEP in unit. Now, the question will tell you that what will be the sales in units in order to achieve this, in order to achieve that. Don't forget that it is break even. You want to know BEP means break even point. You want to determine sales in break even point. Break even point means a point whereby there is no profit, there is no what? Loss. Is that not so? Now, you want to use it to make decision. What will be the break even point in units, right? Now, the formula for calculating this is what? Is your fixed cost, fixed cost divided by contribution per unit. Contribution per unit. Now, don't forget that it will be, is your network. If you can't see my screen, please log out and log in again. Right? Now, please, others should confirm if you can see my screen. Can you see my screen?
Yes, sir.
Okay, thank you. If you can, so just log in and log out. Yeah, you can't see my screen. Veronica, you can't see my screen. Hello, you raise up your hands now. Do you have
I can
questions?
see your screen.
So someone is raising his hands. Please put down your hands, please. Okay. Now, BEP in units, that is sales. BEP in units means that break-even point in units, sales in units, right? Sales in BEP in units. You can put it like that. Sales in BEP in units. Now, to calculate that, it is fixed cost divided by the contribution per unit. Don't forget that I've given you a background of how to determine contribution per unit. Either you say selling price minus your variable cost per unit will give you the contribution per unit, or you do your total sales minus your total variable cost will give you total contribution. Then when you get your total contribution, divide it by the units produced. You have contribution per unit, right? Now, if this is established, you can put it as sales in BEP, sales in BEP, sales in BEP, sales in BEP in what? In unit or BEP in units, right? Now, the next one you need to know is that, you've already calculated the sales in BEP. BEP means point that you will not make profit. What will be the sales in units that you will sell? That you will not make profit or you will not make loss. That is what it means. Now, You've calculated sales in BEP in units. Now you will now still calculate sales in BEP in value. Now you will now have sales in BEP in value, because the question may tell you that, oh, what will be the sales in BEP in what? In value. What will be the sales in value, right? They may not put BEP, right? You should know that it is break-even point, right? So now, for you to get in value now, class, it will still be fixed cost divided by contribution per unit, contribution per unit, times, you multiply by fixed cost divided by contribution per unit times selling price. Selling price. But let me quickly do it this way so that you will not take it. Let me put a block here. I'm coming. Okay. So when you divide it, class, when you divide it, the contribution, let me just explain so that this will not waste our time. Fixed cost divided by contribution per unit times your selling price. We give you your sales in value. We give you your what? Sales in BEP in what? In value. In value. You can see, or you say, or alternative to this, it will be fixed cost divided by contribution margin ratio. Contribution margin ratio. Now, either you use this to get your BEP in value, right? To get your BEP in value, okay. To get your BEP in value, or you use fixed cost divided by what? Divided by contribution margin ratio. Now, this one will now take us to another formula. Don't forget that this formula are being used when it is single product. When it is what? When it is single product. Number four, now this formula will now take us to contribution. The formula for calculating contribution margin ratio. Now, they usually call it CMR, right? Contribution, contribution, contribution margin ratio. Now, contribution margin ratio or CS ratio. They can call it CS ratio. That is contribution to sales ratio. Class. If they don't call it this, they can say it is CS ratio. If they don't call it CS ratio, it could be PV ratio, right? These are the names they called it, right? Contribution margin ratio. Class, I will teach you how to get this formula. You can see that from all this formula, there are some things that are constant there. These are the assumption of break-even point. There are some things that are constant here. What are the things that have been constant in the last three formula? Fixed cost is constant. Contribution per unit is constant. Selling price per unit. You can see that all these things are the assumption of what? Of break-even analysis, right? Of break-even analysis or cost volume profit analysis. Now, class, what is the formula for calculating contribution margin ratio? Now, you already know this is contribution. Contribution, class. Margin means sales, right? Now, contribution margin ratio is calculated as contribution divided by, don't forget that this is contribution margin means sales. So, contribution divided by sales times what? Times 100. We give you contribution margin ratio, or maybe it depends on the question, right? Or contribution. What will give you contribution, class? What is the formula for calculating contribution? Class, what is the formula for calculating contribution?
Selling
Cost?
price minus variable cost.
Thank you. Thank you. So, or I can say or selling price or sales, right? It could be sales or selling price. If you want to use sales, that is total sales, right? Sales minus variable cost. If you use total sales, you use total variable costs. If you use selling price per unit, you use variable cost per unit, whichever one, right? Let me use selling price. Selling price, right? Selling price per unit, right? Minus variable cost per unit, right? Per unit, per one, right? Divided by oh, selling price. You already know is per unit. Let me remove so that it will not confuse you. Selling price, let me say selling price per unit divided by minus variable cost per unit, right? This is variable cost per unit class. Variable cost per unit divided by the sales, which is selling price what? Selling price. SP. Let me put it as SP. So SP, I didn't tell you to go and write SP in example. Oh, it is not SPO. It is selling price. Let me say it again. It is selling price, not SPO. Okay, oh. SP can be special treatment, right? Selling price minus what? Minus your variable cost per unit, right? Okay, thank you. Senior prefect. Okay, continue. Continue. So, if that is established, the next formula you need to know in BEP is sales value at targeted profit before tax. The question may tell you that what will be the sales value at targeted profit before tax? That is, what will be the sales in value before tax? Targeted profit. You projected that, oh, you want to make a profit of 15 naira. So what will be the sales in value for you to achieve that targeted profit? And if that targeted profit is before tax, class, yeah, I can show my video. I'm not with any textbook, but everything is offhand, right? Do you know why? Because I understand the formula. So I want you to understand how these things work, right? PM is very simple, right? It is just too simple. Just understand. Now, the sales, the sales, the sales value, the sales value at targeted targeted profit before tax. So when the question says that what is the sales value at, they may not tell you that it is targeted profit, but you yourself, you will know. The question will say, what will be the sales in value in BEP at targeted profit before tax of 20 naira? You should know that they are targeting one profit, right? So what will be the formula? Don't forget, let me start with units so that let me start with unit. So once we do unit, we will do value. What will be the sales in unit? Sales unit are targeted profits, right? Don't forget we are in break-even point, break-even analysis, right? The formula is fixed cost plus the targeted profits class. That targeted profit that they want to make, right? Target target profit, target profit class divided by contribution per unit. Don't forget, can someone tell me contribution per unit? Class, can someone tell me why we are using contribution per unit to divide when the question
Because
says we should? Okay, I'm with you.
Because
if the sales is in units,
Thank you. Thank you. Afolonsho and Zema, thank you. Because it is sales in unit are targeted at what? Are targeted what? Are targeted profits. Class. It is what sales unit as what are targeted profits. That is why you can see there are some things that is common when you want to get sales at BEP in units, you divide by contribution per unit. But when you want to get value, you divide by contribution margin ratio. You can see what we did in number 3. Is that not so? In what? In number 3. Now, this is units. Now, if you want to get the value, class, if you want to get the value, don't stress yourself. There are 2 ways you can get the value, right? You multiply it by the what? By the selling price. By the what? By the selling price in value. In value. Just multiply it by the selling price, fixed cost plus targeted profit divided by contribution per unit, class, times SP. SP means selling price, oh, class. SP, senior prefect, don't put SP, oh. It is it is selling price per unit. Is that not so? So when you are to determine the value, you can see, just understand, when you are to determine value, multiply by SP, or you divide it by the sales, by the contribution margin ratio, or you say or, right? Or fixed cost divided by CMR. What is CMR, class? Class, what is CMR?
Contribution
Hello?
margin ratio.
Contribution margin
Contribution
ratio.
margin ratio.
Chris, are you still with us? Chris?
Yes, I'm here, sir.
Okay. Now that is what contribution. You can see I have the formula here, but I will not put it like that. Now you can see either, okay, plus, I didn't add plus. You guys did not tell me. Plus target what? Target profit. Target profit will be given to you in the what? In the question. So whichever one you want to use, please note that when you want to determine the unit, divide it by contribution per unit. When you want to get value, you multiply it by selling price, or you divide it by what? CMR, which is what? The contribution margin ratio. Another name for CMR is what? Another name for contribution margin ratio is what, class? Another name for
CS ratio.
Okay, CS ratio or PV
Or
ratio.
PV ratio.
CS ratio means sales, contribution to sales. PV, profit volume, right? It's still the same contribution sales ratio, CS, right? When we're in ATS, and these are the things, these are how they set our questions, right? They say CS, PV, right? But if you don't understand, you just go, right? Now you lose mark. Now another thing is the 7, right? You know, we have we have we have checked the profits before. Follow me, sure.
Please, sir, for the sales in value at targeted profit, I want to get a clarity whether we are dividing the fixed cost plus targeted profit by contribution or contribution per unit. Since we are looking for sales and
I did not
sales
I
in
did not
value.
say I did not say you should. I did not say you should. You are talking about unit, Abi?
No. In value.
In value. No. Don't divide it by contribution. Oh. It is either you use contribution margin ratio, or you say divided by contribution per unit times selling price per unit.
Okay.
Are you good?
Yes.
Now, lastly, okay, not lastly. Oh, how many minutes do we have? Okay, 15 minutes before okay. Now, the next thing we need to look at is sales. We have talked about in units before tax. Then we now talk about after tax, class. We talk about what? After tax. So we can now have sales in units at targeted profits, not before tax again. It is after tax. The question will tell you what will be the sales in units if the company want to achieve profit after tax of this so percentage, class. So this is to tell you that you will need to consider, you will need to you need to take consideration of tax. Is that not so? Now they say it's profit after tax, right? So now when you want to calculate this, it is still the same, but how should I put this? Okay, let me separate it so that you will know that this is how it works. Fixed cost plus the profit after tax, you use your part, profit after tax is part, profit after tax is part, profit after tax is part, right? Profit after tax, profit after tax divided by 1 minus tax rates. You coming? Divided by 1 minus tax rate, 1 minus tax rate, right? Don't forget that I say fixed cost plus this plus this. Profit after tax divided by 1 minus tax rate. Is that not so? 1 minus what? 1 minus tax rate. So when you do your profit after tax divided by 1 minus tax rate, you will add it. What do? You will add it with your fixed cost, then you now divide it. Now, since it is in units, what are we using? What should we use to divide it? Is it contribution per unit or CMR? Since we want to get units, class, unmute your mic. Okay,
Contrib-
Taufik,
Contribution per unit.
contribution per unit. Why? Because we want to get sales in units, class, because we want to get what? Sales in unit at targeted profit or at profit after tax, right? Sales in unit as what? At profit after tax. So you divide it by contribution per unit. Is that not so? So you can see when you see something like this, and this is how you will use to get it, right? You have your what? Contribution per unit. Please, when it is 5 minutes to end this call, please let me know so that I can quickly create another link. This is 11 minutes already. So you divide it by what? Contribution per what? Per unit, because you have to determine the unit, right? You have to determine the what? The unit, right? So if this is established, the next thing we need to talk about, which is we need to do the value, right? We've already talked about the unit, right? At profit after tax. Let me use profit after tax. At profit after tax, they'll say what would be the sales in units at profit after tax. What it means is that how many units am I going to sell if my profit after tax is this, right? They want to make decision based on that. So let's quickly look at the value. Don't forget that all these formulas are meant for what? When it is single product. Single what? We started with what? Single product. Now, if it is in value now, let me change this to value. Then you multiply by what, class? You multiply by what or you divide by what?
PMR.
Okay, thank you. Times selling price, selling price per unit, or Ctrl Z, or you divide it by what? CMR, right? So I'm giving you option now to use, right? So so all this, I'm coming. So or we use CMR, right? CMR. So whichever one, so this one we delete this, you use CMR. CMR means contribution margin ratio, of which we have examined the process of that, contribution margin ratio, right? Contribution margin ratio. So another formula we need to look at, right? Another formula we need to talk about is margin of safety, class. So that will be the last formula here. Margin of what? Margin of what? Margin of safety. Okay. So the next is what? Margin of what? Margin of safety. So all these formula, you must know them, right? Margin of what? Margin of safety. So we have margin of safety in percentage. Let's say in percentage. So what will be the formula for margin of safety in percentage is actual sales. You can see that all those assumptions are now working. Fixed cost is constant, contribution margin is constant, selling price is constant. You can see them, right? Actual sales minus sales at BEP at break even. Sales at break even, class. Sales at break even. This is percentage. The actual sales in the era minus the sales that you calculate, sales in value at BEP. Let me put it so that you know. Sales in value at what? At BEP. Divided by, you divide it by the actual sales, class. You divide it by what? By actual sales. You divide it by actual sales. You can have, when you divide it by actual sales, then you have your margin of safety in percentage. Now, when you have your margin of safety in percentage, what does this implies, right? What does this indicate? When we come back, when we create another link, we'll talk more about it. Now, another thing is, this is in percentage times 100, right? 10. Margin of safety in units, class. Margin of safety in what? Margin of safety in units. So what is the formula for you can see that all these things are interrelated. You can see margin of safety in units. Actual sales in units minus sales in units at what? At BEP, which means that the sales in units you calculated at BEP, you put it here, your actual sales minus what? Your actual sales in units minus the sales in units will give you your margin of safety. Lastly, right? So let's say margin of safety in value. Okay, this is in units. I didn't put it. Margin of safety. Margin of safety. Safety in units. This is the formula, right? So now margin of safety, how many minutes first? Okay, 5 minutes.
5.
Okay, so when it is 4, let me know. Margin of safety, or 3, when it is 3. Margin of safety in value. I'll tell you the implication. Coming? The actual sales minus the sales value at BEP. The sales value in BEP that you calculate, the sales value in BEP, right? In value, you put it here. When you minus it, you have your margin of safety in and these are the 11 formulas under the single product. You need to know 11 formula under what? Single product. Class, if you understand this, you can see how SFM is simple, right? I have the formula here. You can see it. I have them. You can see them. I have all these formula. I have everything, but I won't bring it out. I just want you to understand how it works, right? Now, lastly, let me copy this part. Let me copy this part and bring it forward. So let's quickly create another link so that I will explain the last part. Then we'll look at question, right? Then we'll look at what? Question. Class, this is very simple, right? Class,
Yes.